Handset maker HTC Corp reported its lowest quarterly profit since 2006 as it continued to lose market share to its competitors. Google is introducing a credit card to pay for advertising through its AdWorks program in the UK and in the US. I'm Lindsey Bell, and the morning call starts right now.
Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the morning call. As usual, headlines are driving the markets today. We've got the futures pointing down. Worries about Spain continue. Growth out of Eastern Asia has been downgraded from the World Bank. How are you looking at these headlines today?
Well, I think aren't these the same headlines we've seen every single week? When is Spain going to ask for aid? Does Greece need another tranche? Will China have a hard landing? So it just seems like it just keeps getting, repeating and repeating. So there's only so much that the market could absorb. So as we head into earnings season, that's another, just say, what axe in the fire, is that the terminology
so.
that traders are talking about, because everyone thinks that earnings are not going to be great. So I think the market needs to be a little bit more discounted going into earnings and then the guidance. So all in all, on Friday, it was interesting that, we gapped up. Everyone said, market's going to be strong and breakout, and then we kind of failed, producing a lot of push-through failures. So that headline is the headline that traders are watching. Push-through failure, can't hold momentum levels, maybe trim some longs, and even get a little bit short, because Friday's action was a small negative sign.
So how did you handle Friday's action? What did you end up at the end of the day with?
Well, if you remember Thursday, we broke above 1460. So things looked like they were moving and going in the right direction, resolving that wedge to the upside. So I think I had 5, 6, 7 longs with just one short, actually going into Friday, which is something I rarely do going into a jobs number, because I figured if it wasn't a market-friendly jobs number, we open down, I buy the best acting stocks, hopefully they go positive. If it's market-friendly and we have followed through to the Thursday break above 1460, I could sell some strength, but I could also trail some to see if it holds up. So as the day progressed, in the morning I sold some strength, booked some profits, and then in the afternoon, when the tech started to get weaker and the market started to fail and we weren't able to hold those upper levels, I stopped myself out of other positions, and so I exited the day with only one long and one short, because I wasn't sure what type of continuation we would see on Monday. But I think most guys did go out light, and some even leaning to the short side based on that short-term move that we saw in the afternoon for the markets. What
levels in the S&P are you watching today then?
Today, again, it depends on your time frame. So if you want to take a snapshot at the S&P and take a look about what's happened in the last year, just real quickly, from that October 4th low, which happened about a year ago, that was 1100. 1460 is where we are now. There's been a ton of trading underway in this, which I'm not going to get involved in. So right now, just short term, if you're an intermediate, trend trader, you look here, this was what we saw on Thursday when we tried to resolve and break above this downtrend. And then this action wasn't so blatant and so crazy negative, but it was enough that we pushed through, came back below the previous day's high. So that got me a bit cautious. Now we're opening up a bit lower. So I would say watch 1452. It's the 8th day. And then, I guess we have to extend this little line here up a little bit further, because this is the accelerated uptrend. And now I think this stands closer to about 1444.
Now, we saw the different sectors react differently to Friday's job numbers. The broader market obviously pulled back off of the day's highs. Let's take a look in the sector spotlight at some of the sectors that held up and some that were weaker. First, let's start with the home builders. It's been a strong group all year long. They got back up to the year's highs on Friday. It's been a great macro trade, but as a momentum trader, how do you play it?
Well, we always want to look to the strongest groups to see if they stay strong. That gives us clues. So if you recall, the home builders, pulled back a bit last week, and then I was like, let's watch this lower wedge in the home builders and see if there's opportunity there. So I actually used this vehicle to get long last week, and then I did sell it on Friday near those highs of that prior move. So if you look at the chart here, this doesn't look so bad, right? Here's your uptrend that's in place, all the way from August. Here's where you had that 3-day down move when they sold Lennar after great earnings. And then here's that wedge. If it would have broken to the downside of it, I would have been a little bit more cautious, and I would have been a little bit like, okay, perhaps the pullback could be further. So we started breaking to the upside, so I bought some, and then on some point on Friday, I sold it. So at this point, let's see what kind of commitment there is to the home builders. I would say for this to be any good, maybe treat this as a bigger channel now where here's resistance, here's support. Let's see if it can hold the upper end of it and go sideways and still show you that it could be constructive. You look at something like Lennar. This is when they sold it on the earnings, because of the huge move that it's had, and then it broke the wedge, and look at the alpha here. Look at the size of this move. So, at this point, this still looks good with some of the others. I would say draw a little support right around here. This is the 8-day, 36.52. So I think you could pull back to here if it holds this area. It's something that traders are going to probably be leaning long on.
Retail's been a good performing group this year. If you look at that ETF, it pulled back in the afternoon, just like the broader market, but the positive sentiment stayed with this name. They're still above all their moving averages. So what do you see in this ETF? What's the next support level?
This too opened at highs, and it wasn't like a drastic sell-off. I feel like everyone's so worried because everyone out there is saying that how could this market continue higher based on the uncertainty out of Europe, the slowdown in China, our corporate earnings. So every time we get a pullback, it's like, oh my goodness, maybe this is it. I don't want to be caught looking so with my pants down because I'm long, because everyone says that the smart guys are the bears. But anyway, you look at the RTHs and great chart, continuing higher, a little bit of a doji here. What does that mean? It might, it might give you a few days of weakness. You had a nice little doji here. It produced another range, but you look at stocks like Home Depot, pow. This was my retail stock 2 years ago, closing the highs. Walmart still, looking decent, trying to break out above this area. There's still, a lot of names out there that are providing leadership and rewarding macro investors. But for traders, you have to watch the short-term action. And the action on Friday where it couldn't close in the highs meant maybe we take a few days off.
Okay, that's fair enough. The Q's tech, it's been under pressure, partially due to Apple there. It had an interesting move on Friday, though, so why don't we take a look at that? Yeah,
this is on the other side of the fence. You always have to look where money's going. And recently, the Qs, which traders love when technology leads, and it's sometimes skews my judgment when technology's weak or the Russell's weaker, because these are some of the names that I track a little bit more, closer. And if you look here at the Qs, you will see that, a bit of a character change. Here is a small ascending channel up at the highs. This potent down day right here, September 25th, boom, all the way down into support. And then it's been slowly trying to work its way back. It did pierce a little bit more into this, this bar, so it took away some of the strength of this downward type of move. But then, this was a pretty ugly candle on Friday. This closed near the lows, a lot different than you saw in the XHB and the RTH. You have a small ascending little channel here. So this could resolve and see the 50-day, and the 50-day right now is at 68.14. And I do think this level right here is going to be very, very important to watch to see if it holds, because there are some guys clamoring out there that you have somewhat of a head and shoulders pattern here, which looks like it could be, and if we do break below 68, you have about a 2-point little correction here, because a measured move from the head to the neckline could take you all the way down to this area, which is the 100-day, which comes in around 65.50. So I would just be a little bit cautious there.
Definitely got to be cautious on that one. Let's take a look at a cyclical sector, the industrials, the XLI. It's been in an uptrend since its June low, but you know what? It's still off just a bit from its year's high. Can we get back up there or even further with this cyclical group?
This one, it looks almost like it's correlated very well to the S&P, where it's a little bit weaker. So it's not showing excessive strength. It's not showing excessive weakness. You look at the chart here and you will see it's just in line. So if you like names in here and this is where you focus, that's fine. It did pull back all the way to the 50, so it showed a little bit more weakness because some of the other indices did not do that. It reclaimed them. It's a lower high. If you wanted to draw a trend from here, this is still intact. So I still think it's okay. So I don't see anything so crazy here. This is not a group that I follow so close.
On the defensive side, the flip side, this group is the consumer staples have been slowly moving up all year long, reached a new high on Friday. Can this momentum continue, especially given the macro worries that are out there?
Yeah, well, the market's saying yes. And if you look here, this one didn't really fail on Friday. It didn't have a push-through failure. It's above the 8-day, the 21-day, the 50-day. just inching up there and you know, rewarding investors who want to be in this group. There's nothing faulty about this except for that it doesn't have big exciting days, which is what traders like to see, but you can't be in everything that's big and exciting. So this group right now remains a leadership group, and something, if you're holding, you should be trailing and look for the, you know, the best acting stocks within that group, and that's where you'll see some alpha.
All right, well, we're going to take a quick commercial break and we'll get back into it after this.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into the trenches with some earnings that are coming out this week. Tomorrow morning, Alcoa kicks off the third quarter earnings season officially. And Yum comes out after the close tomorrow. Yum Brands is your Pizza Hut, your Taco Bell play here. These guys, the story really has been expansion into China and overseas. Right now, about 65% of their profits come from overseas, and they're looking to continue expansion there. What analysts are going to be watching for, though, is last quarter, China, their profitability slowed down there. And then also, people are going to see if momentum in Taco Bell here in the U.S. has been able to continue. People love the Dorito tacos. They love the Cantina Bell. But can it continue? So all eyes are going to be on the stock. It's been kind of weak as of late.
Yeah, like I'm looking at the chart, and the chart's not saying much. They haven't like thrown it out the window thinking it's going to be a disaster, but it's not at the highs where expectations are huge. So it'll be interesting to see what it comes out with and how it performs. If you look real quickly at the chart, you will see that it's in the middle of this channel type range. It's above the 200-day. It's given up a few of its momentum moving averages. It did close somewhat weaker on Friday. I would say this is support coming in right here around 63.86, the 200-day moving average. This is shorter term support around 65, 62. My traders aren't going to be trading Yum after the close or after earnings report, so it'll just be interesting to see the type of spin the media gives it and how it acts just for the overall indices.
Yeah, especially with that China exposure. We're also going to get a test, though, from the banks. JP Morgan and Wells Fargo are both reporting on Friday. Both of these names, actually, Stephanie Link owns in her Action Alerts Plus portfolio with Jim Cramer. JP Morgan, best in breed bank, she actually was trimming it, right-sizing the position last week ahead of earnings just because it had such a run. It's up 30% since the London whale low in earlier this year. It's trading above its book value. She still likes this long term. She thinks it's like I said, best in breed bank, fortress balance sheet. They own market share. So what levels are you watching going into the earnings report?
Well, like you said, best in breed, but timing matters. And last week I used this as a vehicle for timing. It's been a great trade. It's trading with patterns. Overall, if you take a quick look at JP Morgan, you'll see there have been great times to enter and great times to trim some. But overall, as an investor, you probably could stay the course. This is what you said about that low right there when they finally came out with their big number for their loss. And since then, it's been a rally point. This is when the banks took off. Great entry right here, September 6th. This was after Goldman went the day before. And then recently, it's been hovering in this channel, letting the moving averages catch up. I think I went long. This was Wednesday, added on Thursday. And then what do you do on Friday? You take some profits after a 3-day move. So I do think, it's something to watch to see on today's downside weakness. So I would say, watch maybe around 41. I'd love to see it at least hold. There's this 40-90 area that would show commitment to this move, this methodical move to the upside. And then again, it's going to be very important to see what happens with earnings with Wells, what happens with earnings with JP Morgan. There's a lot of talk that the earnings of the past few quarters haven't been quality earnings, so we'll see what they say this time. I know that maybe the housing area getting a bit stronger could help them with their marks on some of the mortgages and the distressed debt. So we shall see, but that's on Friday. Well, hopefully we'll see if we could see some strength going into that in the next few days as the market's weaker coming into today.
Yeah, exactly. Wells Fargo is Stephanie's favorite way to play the housing recovery. She owns the stock. She's a buyer going into earnings, actually. She just really sees this as a dominant player in the mortgage industry. They have the biggest portfolio there, and they're just taking share from Bank of America and the likes.
Yeah, because these guys haven't had a blow up. headline-wise. And if you look at the chart, though, you just have to be careful because this is a stock that the expectations are high, so it's going to have to deliver. It's been in a methodical move to the upside where it's near new move highs. So this is definitely something that's rewarding investors who are sitting here. It's definitely a choppy trade, but some things are a trade and some things are an investment, and this one's been an investment. But it's near the highs here. It's going to have some quality earnings in order to get any more follow-through, and it'll be interesting to see if some banks, especially a huge one like Wells Fargo, can get follow-through. So it'll be important to see what goes on there.
Costco will report earnings on Wednesday. This stock has had a great run since June. It's been in an uptrend. It's near highs right now. Last week it reported same-store sales that were better than expected. It was interesting because these guys didn't see a slowdown in September that a lot of the other retailers did see. So the earnings beat here came in a little better than expected, which means that EPS could probably be a little bit better than expected. So I think expectations going into this one might be a little bit higher. But what levels will you watch?
Well, the expectations on all these big box type of companies have to be up there because their stocks have done so well. And this one, same way as everything else. You have to be a market timer here or just hold it. And at this particular point, you look at the chart of Costco, you will see this is when we got pretty excited about it when it broke this downtrend. And then you had a nice bull flag to the upside, bull flag to the upside. This one was a bit more longer, so more of like a descending channel. Then it peaked out, pulled in, from these upper levels to shake it up and came right back up. So, this one is being supported by institutions. I think this is one that people really want to do well and act well. And it makes sense in this environment that with the cost-conscious consumer, they're not being thrifty, and that's why you're having success in a Costco, a Home Depot, a Walmart, a Target. So that theme, and it's always sometimes good to stick to a theme, has been working. So let's hope their earnings deliver, but they're going to have to be good and guide in line or higher in order to get any kind of upside from here.
Yeah, absolutely. Let's do some quick hits. We'll start with Chevron. This is a name that Stephanie owns. She's been trimming it, though. Given the run that it's seen, what levels of resistance and support are you watching here?
This one with ExxonMobil are both holding higher. And with oil coming in, I thought it was pretty interesting that they've stayed in the game. So you look here at Chevron, as an investor, you've done really well. As a trader, there are times, there are times to get in. Last one for a trader was right here, this nice little tight pattern, going into the highs. And since here, it's been holding up really nice. This is a nice channel, hugging the 8-day, letting everything catch up. Overall, stock's been performing very well. But the question is, can it get continued momentum? For that momentum to happen, it's going to have to get above 118.25, and that's when I think it can get a little frisky. But at this particular point, it could use more time as look at the size of this run. It's been enormous, and equity investors all across the board have been rewarded. Same thing goes here for XOM. Boom, trying to inch its way higher. A lot going on in equities, and these are the type of behemoth companies that show you it's far from dead. You just have to be a stock picker and then know how to maneuver it and manage it.
Yeah, stock picking is very important. Actually, another behemoth, Fedex. Stephanie, this is a new position for her that she got into last week. September 18th, these guys came out. They cut their earnings guidance for the quarter and for the year. Really just disappointed the market overall. But it's been consolidating. The stock's been consolidating at this lower level, so she's getting in.
All right, well, sometimes you just have to, be forward-looking, and this one is, buying a big behemoth quality company in the whole. For me, my traders won't touch it. There's no reason to as an investment. Maybe if you look at the chart, I would say if you're uncommitted to this, buy it versus 84.50. As long as it stays above 84.50, I think it's okay. Here's your resistance where all these moving averages probably should act like a brick wall, but that comes in around 88.
Well, you touched on Walmart, so let's just move right on to Apple. This stock, it moved the NASDAQ lower. It had a 14-point move on Friday. Just where can it go from here? What are you watching? Are you long or short this?
I'm coming in flat. And it's great. I've been flatted since actually Thursday. So it goes to show you that even like someone who likes to be long Apple, there are sometimes times that you have to step aside. And I would say half my floor made good money shorted on Friday. So it shows you could take both sides and you just have to measure the composure. Now, about a week and a half ago, I think on Cramer's Mad Money, we talked about what happens if Apple breaks the 21-day moving average. What happens if it breaks a trend that it's been following, for a month or so? It means that the trade changes. You look at it differently. And I know around 683 is when I got out of my last trailer, as I was involved with it for 60, 70 points lower, and it became a trade. a two-sided trade where you could buy into key areas tactically and short into resistance. And if you look at the chart here, you will see that there's been a lot of movement in the last week and a half for guys to take advantage of. This is when I got stuck. This was that 700 milestone. This is that small little outside day where I think this is where I got down to a very small position, and then held it here because it still was a beautiful move from the lows. And then right when it cleared and broke below this candle of 683 and broke to 21, I was out. And then from there, it's been a nice trade. Here was the first time, gave you that red dog reversal right there for a nice intraday trade. If you took some home, you had to get stopped out as the 21-day, held it in check. Then you had a move lower through this small trend line to touch the 50-day. On that 50-day, remember we saw that igniting bar around 315, gave you a nice trade, a two-day trade back up to almost as high as 671. So right there, that was about 20 points in a day and a half, even less if you say that the move started at 3 o'clock. So nice quick trade. Then here, a lot of guys said, Red Dog, isn't this a Red Dog reversal? Didn't it make a new high and come back below it? I'm like, yeah, if you're an active trader, yeah. Or if you were looking to look for a sign to get out of what you were trailing there, went above this high of 671, went as high as 674 and a quarter. The 21-day held it in check again, came below it, another sell signal. And then if you didn't use that, here was those 2 days. If you guys remember on Twitter, like if you're a swing trader, use 665 to get out for a level, and if you don't get out there, use 662, which is right there. That's why I came up with both these numbers. If you did so, you saved yourself a nice move to the downside, and it's continuing. Some guys shorted this area. I know Vicky and I think Fish and Taylor, they're like, Red Dog, I'm shorting this. I'm like, you know what? I'm just going to stick on the side. I wasn't in on Fridays. But anyway, lost a 50-day. First time you hold it, second time you usually don't. Now if you look at a level here, that's worth trying. Maybe if you are active and you are short, you see here, this is 644, coming across also to 640. So I would say there's a void down to this area if you are shorted. Area to probably cover a little bit. And I will look to see if I see some kind of divergence there. I'm coming in flat, so I feel like I have a good handle on it. I'm not going to be emotional. I'll be more objective. And if I see some kind of relative strength in that area where the futures continue down, it doesn't go lower, I'm going to look to get long. And I'm not saying it's going to be the bottom of Apple, but it could be a move from 640, 644 back to retest now the 50-day. That should have been support that could turn into resistance, and then see how it maneuvers and keep maneuvering until we get close to earnings, because earnings, I'm turning this into a big hit. I'm sorry. Me, Apple. I could talk about 1,000 things on Apple. I even stopped home at the Short Hills Mall yesterday to see what the hell's going on there with the supply constraints. In the mall, went to the Verizon store. I couldn't get a phone. I have a Verizon plan. They're like, you can't get a phone until October 25th. Then I go into the Apple store. They're like, you can't get one. You got to go on a list, sign it up at 10 o'clock at night, and then come back tomorrow. I'm like, I'm working midday. I can't come. They're like, we can't hold it for more than 24 hours. So there's like some like Buffett type of scenarios that are making me a little bit worried. I don't think a lot of phones are available, so I have a feeling the third quarter is not going to be great. So if they could just discount this stock low enough, maybe it'll be priced in, because I do think fourth quarter, iPhone 5 is going to be selling like crazy. Your little mini Max, I'm sure, will be, a hot item. So, it's just all how it's going to be maneuvered, from now till through then. So you have to do it correctly. Don't have opinions. My opinion is that the highs of the year are not in for Apple, or the high or the historic highs aren't, but that's just an opinion for now. You don't see me long, and you don't see me stubborn. You don't see me just buy, because I couldn't handle it, because I know the way I can handle myself. But tactically, 640, 644 is a spot. If it doesn't hold that spot, I want to show you one more spot on the chart. If you go to it, a very long hit. The 100-day, which is right here, which, remember, the 100-day held the last time, which was down in May, and it still wound up making highs again. People thought it was game over for Apple when it made a high here of 644, pulled all the way down to the 100-day of 528, and then look what it did. So don't be so, overly upset or worried or about what just took place here. All it is the ebbs and flows of Apple, which sometimes it's easier to be a trader, sometimes an investor. This time it's a much easier time to be a trader. 100-day, 619 probably moves up if it doesn't hold here to about 622, and that'll be another spot that we tactically look at it. And I think we have to skip all the other quick hits.
I just got to cut you off at this point.
That's it. I'm done. Let's just do an Apple video.
We should. Well, that's all we really have time for. So check in at the end of the day for the daily recap with Scott and the T3 Live team.